Today's subject, salt. And not that type of salt that if you don't have enough of it in your body, you can actually die, but the other salt, the state and local tax. So the law has changed just recently in, when was it? July of this year, where the limit of how much of the state and local tax deduction you can take on your tax return was increased from $10,000 to $40,000. However, this time around, it's tied directly to your AGI, adjusted gross income. So if your adjusted gross income for 2025 is $500,000 or less, you might be able to deduct the entire $40,000 of the state and local taxes paid to your state. However, if your income is anything over $500,000, then you have to prorate the amount of deduction you can take. So let's say you made $510,000 in 2025, adjusted gross income. Then you can take the deduction of $40,000 minus 30% of that amount over the $500,000, which is $10,000, 30%, $30,000. So now your deduction is decreased from $40,000 to $37,000 because your income was over $500,000 by $10,000. So therefore, your deduction is decreased 30% of that amount over $500,000. So what happens when you get to $600,000 and over, then your deduction is limited to the old limit, which is $10,000. Is there anything you can do about getting to as close as possible to $500,000? Yes, there are some planning opportunities. For example, if you already have to take RMDs, which is required minimum distributions from your retirement plans, then you could designate that distribution as a qualified charitable distribution, QCD. So what happens then is that, let's say it's $100,000 of RMDs, required minimum distributions that you have to take for 2025, you can designate that the entire amount or a part of it as qualified charitable distribution, removing that amount from your adjusted gross income. And let's say you're in a situation where the total of your income with that required minimum distribution would have been, let's say, $600,000. By taking that $100,000 as a qualified charitable distribution, you now decreased your adjusted gross income to $500,000. And then instead of taking just that one limited deduction of state and income taxes of $10,000, you're back in the game. You can take the entire $40,000. And AGI is also important in cases where we're talking about Social Security taxability, Medicare premium brackets. So it not only applies to maximizing your state and local income tax deduction, it's a win, but also it applies in many other cases. Until next time.